Hello everyone, my name is Zikra Lulu Azara from the Accounting Education Department. In this learning video, our goal is to understand special journals in trading companies, including their types, functions, formats, and how transactions are recorded in each journal. Hello everyone, in today's learning video, we're going to study an important topic in accounting for trading companies, which is special journals. This material is very useful to help us understand how trading companies record their daily transactions, which often occur repeatedly and in large numbers. Let's begin our lesson. A trading company is a business whose main activity is buying goods and selling them again without changing their form. Because trading companies experience many repetitive transactions such as purchases, sales, returns, cash receipts, and cash payments, they need an efficient recording system. What exactly is a special journal? A special journal is a journal used to record similar transactions that occur frequently and repeatedly. By using special journals, transaction recording becomes faster, more organized, and easier to post to the general ledger. Unlike the general journal, which records all types of transactions, special journals focus only on specific types. In a trading company, there are 4 main types of special journals. The first one, sales journal. Used to record credit sales of merchandise. The format usually includes date, customer name, invoice number, and the sales amount. For the example, January 2nd, sold merchandise on credit to PT Maju Jaya for Rp 5 million. Recorded in the sales journal as the second, purchase journal. Purchases journal is a special journal used to record all credit purchases of merchandise made by a trading company. For the example, January 5th, purchased merchandise on credit from UD Jaya Abadi for Rp 3 million. Recorded in the purchase journal as the third, cash receipts journal. Cash receipts journal is one of the special journals used in accounting to record all cash inflows of a business. For the example, January 7th, received cash Rp 1,500,000 from a customer. Recorded in the cash receipts journal as the fourth, cash payments journal. Cash payments journal, also called a cash disbursements journal, is a type of special journal used by trading companies to record all transactions that involve cash outflows. In other words, anytime the company spends cash, the transaction is recorded in this journal. January 12th, paid debt to UD Jaya Abadi for Rp 3 million. Recorded in the cash payment journal as and the 4 journals are special journals. Next we will discuss the formats in special journals. We now explanation of special journal formats. In a merchandising company, special journals are used to simplify the recording of repetitive transactions. Each journal has a specific format that helps accountants organize information clearly, efficiently, and systematically. Below is a detailed explanation of the formats used in each type of special journal. Sales journal. The sales journal records all credit sales of merchandise. It does not include cash sales or sales of non-merchandise items.
Date records the exact day the credit sale occurs. This helps in tracking payment terms and due dates.
Indicates the buyer who owes money to the company. Listing names helps monitor accounts receivable accurately. A unique reference number for the sales transaction. It reduces the risk of errors and allows quick lookup of supporting documents. Debit. Accounts receivable. Shows how much the customer owes. Every credit sale increases the company's receivables. Credit. Sales. Records revenue earned from selling merchandise. Purchase journal. The purchases journal is used to record credit purchases of merchandise. Cash purchases are not included here. Date shows when the merchandise was purchased on credit. Supplier name identifies the company from whom the merchandise was obtained. Invoice number, a reference number used for verification and auditing purposes. Purchases, debit, records the value of merchandise purchased. This increases inventory. Accounts payable, credit, shows the company's obligation or debt to the supplier. This format keeps all credit purchases organized in one place, making it easier to track who the company owes money to. Cash Receipts Journal. The Cash Receipts Journal records all cash inflows, such as cash sales collection from customers' receipt of interest or other income. Date shows the day cash is received. Description provides information about the transaction, such as customer name or type of income. Accounts receivable, credit, used when customers pay off their debts. This reduces the receivable balance. Sales, credit, used when the company makes cash sales of merchandise. Other accounts, credit, applied for transactions not related to sales, such as receiving interest, rent income, refunds, or capital contributions. Cash, debit, shows the amount of cash received. Every cash receipt increases the cash balance. Cash Payment Journal. The Cash Payments Journal record all cash outflows such as paying expenses, settling accounts payable, purchasing supplies, any transaction that decreases cash. Date indicates when the company made a cash payment. Description describes the purpose of the payment, such as supplier name or type of expense. Accounts payable, debit, used when the company pays a debt to a supplier. This reduces liability. Other accounts, debit, used for various cash expenses, salary expense, utilities, stationery equipment purchases, or other expense categories. Cash, credit, records any decrease in cash as a result of a payment. The formats of special journals are designed to organize financial information clearly and efficiently based on the type of transaction. Each journal, sales, purchases, cash receipts, and cash payments, contain specific columns that match the nature of the activities recorded. These formats help ensure that every detail, such as dates, invoice numbers, account names, and amounts, is placed in the correct section. By using structured formats, companies can record transactions faster, reduce posting errors, and maintain accurate financial records that are easy to trace and analyze. Why use special journals? Why do companies use special journals? Because they offer many benefits, such as saving time and recording transactions. Improving accuracy, since similar transactions are grouped together. Simplifying posting to the general ledger because the columns are well structured. Allowing division of work, such as a cashier focusing only on cash journals. After creating a special journal, post it into the general ledger. After transactions are recorded in the special journals, the next step is posting, which means transferring the total amounts from each column to the general ledger. Posting is done based on column totals at the end of the period, not for each individual transaction. This makes the process faster and more efficient. To conclude our lesson on special journals in trading companies, let's review the key points we have learned. Special journals are used to record repetitive and similar transactions in an organized and efficient way. In trading companies, there are 4 main types of special journals: the Sales Journal, Purchases Journal, Cash Receipts Journal, and Cash Payments Journal. Each journal serves a specific purpose depending on the type of transaction being recorded. Before using these journals, it is important to understand their basic format. Although each journal may have slight differences, most special journals generally include date, when the transaction occurred; description or account name, details of the customer, supplier, or purpose; invoice number or reference, proof of transaction; posting reference, post, ref, used when posting to the general ledger; amount columns, specific columns for debits, credits, or totals depending on the journal type. For example, the Sales Journal has a specific column for credit sales, the Purchases Journal has a column for credit purchases, while the Cash Receipts and Cash Payments Journals include multiple amount columns such as cash, accounts receivable, or accounts payable. By understanding the function and format of each special journal, we can record transactions more accurately, more efficiently, and more systematically. This structure also simplifies the process of posting to the ledger because only the column totals are transferred at the end of the accounting period. Overall, special journals help trading companies handle high volumes of transactions in a clear, organized, and professional manner. Mastery of this topic is essential for anyone studying accounting or working with financial records. Thank you for joining this learning session. I hope this lesson helps you better understand accounting and trading companies. See you in the next learning video. Thank you for watching and see you.